Rigetti Computing, the innovative quantum computing company, saw its share price crash by more than 44% in one day, following comments by the NVIDIA CEO about the industry overall, about the time it's going to take for any meaningful growth in the quantum computing industry. So, why is Rigetti Computing stock crashing? Well, it's because of those comments by NVIDIA CEO. But is it a buying opportunity for investors? That's the question I'm going to answer in this video, looking at the company's financial metrics and looking at the new updated valuation following the 44% discount to see if now is a good time to buy this innovative quantum computing stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So as I shared with you in the introduction, the stock price in one day is down 44%. Now that shouldn't surprise many investors considering the volatility in this stock has been very high already. The price had actually been increasing by large magnitude over the last 3 months, and I'll share that with you. Even after this 44% stock price decrease, if we go back for the last 3 months, it's still up over 1,170%. Before this crash, the stock price was actually up over 2,000% in 3 months. This is rare. You don't see this all that often, and Rigetti Computing had been one of the stocks that benefited most from the announcement from Alphabet surrounding its breakthrough in quantum computing. So interestingly enough, Rigetti stock investors are experiencing the wild fluctuations up and down from things that are happening outside of the company, right? First with Alphabet and the positive impacts of news from outside of the company, and now with NVIDIA and the CEO, and with the negative impact following that news, again, outside of the company. So very interesting, very volatile, very risky investment here. Large swings, ups and downs, and I suspect this will continue over the near term, the volatility in the share price. So the company's revenue is very small compared to the market cap and the stock price. Its trailing 12-month revenue is only 11.89 million, less than 1 million per month in revenue. And it's fluctuating, right? You're going to see this. This isn't one of those industries where the growth is going to be linear, where every year these companies experience a little more revenue, 15% growth or 20% growth, right? Some industries grow in that fashion. The quantum computing industry, as it is right now, is not going to grow in that fashion. It's more likely to be lumpy, and you could see this company fluctuate here around 10 million, 12 million, 15 million in revenue for another couple of years, and then suddenly sign a contract, get some deals after a breakthrough, after a commercial application is identified, and revenue soars to 100 million, 500 million, something large like that. So this is going to be a lumpy industry where growth will happen suddenly and sharply, or it will not happen for a very long time. And that was what NVIDIA CEO was actually saying, that for the next decade or two, you shouldn't expect very much growth in this industry in terms of revenue. You may expect growth in terms of breakthroughs and theoretical announcements, but in terms of revenue, commercial application, the NVIDIA CEO was, I guess you can say, pessimistic, suggesting that 20 years would be a reasonable time frame to expect a powerful quantum computing industry. And so I guess quantum computing stock investors were a little more optimistic than that, considering the price decrease, right? If the prices of quantum computing stocks had soared following the comments from the NVIDIA CEO, that would have suggested that stock market investors thought that 20 years would be earlier than they were expecting. So that would have caused an increase. But the big decrease and the magnitude of the decrease suggested that stock market participants were thinking a lot sooner was when you would get useful quantum computers. And it's important because these companies are losing a lot of money, Rigetti included. The operating margin was negative 565%. So it's not like it can survive at this smaller scale, like it has time, right? You can't go 20 years losing this much money on the bottom line. It will be difficult to retain investor interest and all of the money that's going to be required from investors for that long of a time. Although this has been an opportune time for companies like Rigetti, they've been able to raise significant sums of investor capital because the stock price jumped by 2,000%. They said, hey, this is a good time. Let's sell some shares of stock and raise millions of dollars. That'll give us time, right? That'll give us another couple of years of runway before we run out of cash. And who knows, between now and the time we run out of cash, we might make a breakthrough that causes a significant increase in revenue and cash flow and a significant increase in the share price, which we can then again take advantage of and raise more money from investors and give us another few more years and kind of bridge the gap in that way, one milestone at a time, until they get to the point where it's a sustainable business. But 20 years is an awful long time to wait, and we know investors are not patient. In fact, I would speculate that the investors buying these quantum computing stocks today are not buying it waiting for 20 years for the business to materialize. They're buying it because they notice these large fluctuations in the share price and they feel that they can buy the stock today and sell it maybe next week at a handsome profit. That's what investors in these quantum computing stocks, in my opinion, are shooting for here. They're not waiting for these next decade or two for these companies to start generating meaningful revenue and profit. And the big negatives are similar in the cash flow from operations, negative 458%. I'm just sharing these to highlight, these are very early stage companies. The spending in research and development far outweighs how much they're generating in revenue. And they need to continue that because they need to make breakthroughs in order to find commercial applications for this technology so that they can sell that technology to enterprises and generate revenue and profits. So following this big stock price crash, you notice an updated valuation. Rigetti Computing stock once was trading at a forward price to sales of around 200, is now trading at a forward price to sales of 54. Still much higher than where it's been all year. In the past 2 years, actually, this is close to the highest this stock has traded for going back 3 years. So it's still near the higher end of its valuation, and it's still much higher than where it was to start 2023 and to start 2024. So to answer the question, is this crash a buying opportunity for Rigetti Computing investors? I would say still no. I would say the valuation still incorporates a lot of enthusiasm. It's up still over 1,000% in the last 3 months. So a lot of that enthusiasm is still baked into this valuation. So I would continue waiting for a better entry for this innovative company. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.